The NASDAQ market is open, and Datavault AI Inc. DVLT is currently trading at $1.45, reflecting a significant intraday gain of 0.090 cents or 6.62% for the session. What most investors are seeing right now is a volatile penny stock, a clear, sharp spike in trading volume that is driving the price higher today after a notable pullback yesterday. But the surface-level story of daily fluctuation misses the deeper, much more interesting context. This surge is less about a random retail pump and more about the market belatedly catching up to a fundamental, structural shift that has been underway for weeks. The expectation is that this stock is pure speculation, a name to be tossed around on social media and day trading platforms. The reality is that management has been surgically executing a series of financial and partnership moves, deals that include a massive capital infusion and strategic licensing agreements, which, taken together, are systematically trying to rebuild the company's valuation from the ground up, moving it from a heavily shorted liability to a potential infrastructure player in the data monetization space. This is the tension we need to analyze. The stock is trading like a lottery ticket, yet the company is behaving like a mature, focused entity laying down concrete financial tracks. Let's establish the common ground first. For a long time, the Datavault AI Inc. story was complex and messy. It was, until earlier this year, known as WISA Technologies, a company focused on wireless audio technology, and then it executed a name and business model change into the AI and data sciences space. That history is a massive headwind, leading to the low share price and the prevailing skepticism. The market has generally believed that this is another struggling small cap pivoting to chase the AI hype train, using the word AI as window dressing to mask underlying operational issues. This sentiment is reinforced by the highly negative trailing 12-month earnings per share (EPS) and negative net profit margins that have plagued the company in recent quarters, figures which make any traditional valuation analysis like P/E ratios completely unworkable. Even their last reported quarterly EPS was a significant miss, reinforcing the view that this is a company in constant turmoil. However, the contrarian deeper take that is fueling this current short-term volatility and today's 6.62% jump is the astonishing pace of deal-making and financial engineering that has occurred since September. This is not the typical behavior of a distressed company. Datavault recently secured a significant strategic investment, a 9-figure commitment, with the first tranche already closed. This investment wasn't just cash for survival, it was earmarked specifically for infrastructure expansion, turning the treasury itself into a growth accelerant. Concurrently, the company successfully converted a substantial portion of its convertible debt, effectively tightening its balance sheet and reducing potential future dilution from that source. The market often discounts the importance of convertible debt conversion, but it's a critical sign of financial strength and management's commitment to controlling the capital structure, especially for a small cap. The perception of a cash-strapped tech company is being challenged by the reality of a war chest built to scale. Looking at the daily movements, the volume traded in the last few sessions has been notably elevated, especially considering the stock's small-cap status and low float. This points to a battle between short sellers who are betting on the old distress narrative and aggressive new institutional and retail buyers who are buying into the new infrastructure story. This institutional interest, while still a small percentage of the total shares outstanding, has seen an uptick in new positions and increases in existing positions from select funds, indicating that sophisticated capital is beginning to take a closer look. Furthermore, regaining NASDAQ compliance, which the company recently achieved by sustaining a share price above the requisite $1 minimum for 10 consecutive days, was a key technical and psychological milestone. Compliance reopens the door to larger institutional investors and managed funds, which often have mandates that prevent them from purchasing shares in non-compliant companies. This single event may be one of the quietest but most important catalysts in the stock's recent history, and it helps explain the underlying resilience we're seeing today, even after yesterday's decline. The real story here is the pivot away from a simple B2B software model to becoming a core infrastructure provider for what they call the digitized value economy. Datavault's core technology, which they call data value and data score, uses algorithmic intelligence to authenticate and appraise real-world assets. They are using their patented technology, which includes their ADO inaudible tone technology for verifiable data transfer, to stand up 4 independent data exchanges. These exchanges are targeting asset tokenization across massive, untouched markets. Real-world assets like minerals and carbon credits, name, image, likeness rights in sports and entertainment, corporate data monetization, and even compliant political donations. The fact that they anticipate launching the first 2 of these exchanges before the end of the year, accelerated due to clearer regulatory guidance in the U.S., suggests a management team moving with intent and speed. This is not vaporware. This is an attempt to build the trading floors for assets that currently lack a transparent, regulated, and liquid market, which is a massive addressable opportunity. This ambitious goal is what sets the narrative for Datavault AI Inc. apart from other small-cap AI plays like SoFi, Robinhood, or Fidelity, which focus on consumer investment, self-investing, or online investment platforms. Datavault is focused on the plumbing of new asset classes entirely. They've also forged major partnerships that lend immense credibility. An in-kind commitment of thousands of engineering hours from a technology giant like IBM is a powerful endorsement. A company of that size does not commit resources to a speculative maybe. This commitment is aimed at integrating Datavault's platform with IBM's AI and cloud infrastructure, essentially validating the core technology as enterprise-grade and scalable. Similarly, the recent exclusive license agreement with a company like Silex for the tokenization of genomic and DNA data is a clear move into the high-value, high-regulation healthcare data market. This $10 million licensing deal, while non-dilutive, provides immediate, measurable revenue and validation of the platform's utility outside of financial technology. It demonstrates that the Datavault platform isn't just a concept, it is an operating system for verifiable data in highly regulated industries. This execution against a strategic roadmap is the reality that clashes directly with the market's expectation that this is simply a pre-revenue, financially weak microcap. The trading in DVLT is likely to remain highly volatile heading into the end of the year, driven by the binary nature of their immediate catalysts. The next major event is the expected earnings report in mid-November, where analysts are already projecting a much improved, though still negative, EPS figure. The market will be focused less on the historical loss and more on the accompanying guidance and management's commentary regarding the progress of the 4 new data exchanges and the revenue contributions from the CompuSystems acquisition and the Silex license. If management confirms the higher revenue outlook they previously guided, projecting tens of millions of dollars in revenue for the next year, and provides a clear roadmap for the launch of the international elements and NIL exchanges, the stock could see another sustained leg up. A failure to execute on the launch timeline or any unexpected delay in the strategic capital deployment would immediately reinforce the negative expectation and could lead to a swift correction back to the lower end of its recent trading range. The opportunity for Datavault lies in its ability to complete that first fully compliant trade on one of its regulated digital platforms. That single proof point would fundamentally change the company's valuation framework from one based on assets and past performance to one based on future transaction volume and network effects, the same valuation method that fuels much larger, more established platforms. The risks are substantial, of course. The company continues to carry negative cash flow from operations, and a reliance on aggressive expansion and unrecognized revenue could certainly lead to earnings volatility. Execution risk is high. Building compliant, secure digital exchanges from the ground up is a monumental task that requires impeccable regulatory and technical precision. The current price action is therefore a testament to the belief that the reward of becoming a foundational layer in the digitized asset economy outweighs the substantial but manageable risks of a small cap scaling its operations aggressively. For anyone interested in the future of asset digitization and its intersection with AI-powered data validation, this stock is a pure,
albeit high-risk play on that underlying infrastructure, making it a compelling, if nerve-wracking case study in market perception versus operational reality. This is vastly different from the more mature, diversified, but arguably slower-moving fintech space, exemplified by Interactive Brokers trading platform or the self-investing tools offered by Schwab Intelligent Portfolios. Datavault is swinging for the fences on a new asset class entirely. Comment below what percentage of your portfolio you would consider dedicating to a highly volatile, execution-dependent small cap like Datavault AI Inc., and what single news event you believe would be the tipping point for a break above the $3 technical resistance level. The core insight here is a clear divergence. The prevailing market expectation views Datavault AI Inc. as a speculative, struggling small cap still trying to shed its complicated past, evidenced by its penny stock price tag and high volatility. However, the reality, as demonstrated by the sequence of high-value strategic deals, the nine-figure capital infusion, the successful debt conversion, the IBM engineering commitment, and the immediate revenue-generating licensing agreements, shows